Quick disclaimer here, trading is very risky and carries a high level of risk. Anything said here is not a financial advice. Make sure you trade with money you can only afford to lose. Stay safe. Instead of missing out on all this old move because of your magical trend line that you think should always grab liquidity, you could have used internal range here. And you are done. What's going on, guys? This is the voice of Traders World Bank. It's a beautiful Saturday out here again. But this case is a little bit different because today's date is 26th of November, and I'm very sure I won't be uploading this on the 26th of November or 27th or 28th, probably a week after or 2 weeks after, because right now I'm already at the NYC camp. So if you are seeing this video, just know that I'm at the NYC camp running my service here. So in today's video, without further ado, if you are a new subscriber, I welcome you all. Thank you for subscribing. And I also wanted to know that in this YouTube channel, I make content of simplicity for traders and those who are aspiring to trade for the first time. And in today's video, we're going to be looking at liquidity. Okay, we're going to be looking at the concept of liquidity. Now, this is a very sensitive topic due to the fact that most people are always confused when I take trades and there's probably liquidity like this, and there's a supply zone on that same spot, just like this. And people are asking me that, why did I take the trade? Why didn't I use probably the supply zone that is above the liquidity? Because I said in my ebook, if there's liquidity on where there's a supply zone, you should use what's the liquidity above. When you are drawing the supply zone, use the liquidity above. When you are drawing the demand zone, use the liquidity below. Yes, that is correct and very intact. But then sometimes people still say, oh, there's liquidity here, there's a supply zone there, but you said we shouldn't take the trade, this and that. And that is due to the fact that I'm going to explain in this video right now. So let's look at other examples. Let's look at more examples. Now look at this one. This one is a little bit clear. There's liquidity here. There's a demand zone here. And this one played out well, right? So there's still a lot of scenarios like that, whereby there will be trades on liquidity just like this. Look at this. There's liquidity here. And there's a supply zone there also, like this. And look at what happened. It was even, in fact, a sniper trade. But why didn't price grab liquidity? Okay, we're gonna look at that in a few minutes. So that is just what I have for you guys today. Let's still continue moving. So I'm gonna explain this in a few minutes also. And this is the current market price, right? This is the current market price. Okay, now let's quickly go back to where we are coming from, and then I'll still have more to say as we are moving. Now, first things first, when trading liquidity, you should always know that just because you drew a trend line on the markets, just like this, just because you drew a trend line on the market like this, showing that there's probably liquidity there, does not always mean market makers would grab liquidity. Okay, your trend line doesn't mean anything. Because you are saying, okay, because you as a retail trader now are saying, okay, there's liquidity here, then market makers should grab liquidity. That is absolutely wrong. You're already messing with your psychology. You understand? Market makers or the market makers would always do whatever they want to do, would always take price wherever they want to go. Either there's liquidity above or there's liquidity below. That is one thing you should know. That is one. So just because I drew a trend line here doesn't also mean that is what made this trade to play out. Okay, this demand zone is a very active demand zone. That is why the trade played out. Without looking at liquidity, let's ignore the fact that there's liquidity there. This trade, played out. Okay, so me putting a trend line here that okay, there's liquidity there, that is not the reason why this trade is playing out. You understand? This trade is playing out because the market makers wanted to play out. That is one thing you guys should know and understand. Whenever your trade is in profits, don't think, okay, because I did these trades in profits. Yeah, because we did the trades in profits, yes, correct. But then, if price or market makers don't want to move in that direction, trust me, my trade will hit the stop loss. And also, just because we call this ICT or whatever strategy we call it, that does not also mean we are trading what the banks are trading. Okay? And that doesn't also mean we are all institutional traders. Understand? We are still retail traders. We are not institutional traders because we don't have inside information of whatever is going on inside. So we are all still institutional traders. Now let's continue moving. Let's continue moving. Okay, look at this now. Look at this. There's liquidity here and there's a supply zone there. Shouldn't I be using the supply zone at the top somewhere here? But look at what happened. I use the supply zone and it's played out nicely. Then you can still say, okay, this is confluence. Liquidity has confluence over here. Then the supply zone is more active or more valid. Yes, you can say this also, that is okay, there's liquidity there, there's a lot of price action inside this supply zone over here, below the supply zone over here. Then that may be the reason it is playing out. Well, maybe not. So why does liquidity work sometimes and why does it not work? So best to my knowledge, we all know what is called internal and external range liquidity. Sometimes, and even most of the time, liquidity might have been grabbed without us knowing at all. Okay, liquidity might have been grabbed without us knowing at all. But looking at this range over here, there's no liquidity grabbed at all inside here. Okay, so this one is due to the fact that yes, we are the market makers, and then we can sell wherever we want to sell. We can buy whatever we want to, whenever we want to buy. This is a valid supply zone, so we could have taken the trade over here and then gotten inside the sell position and then maximize your profits. But let's look at what I mean by sometimes liquidity might have been grabbed and you don't know. So this one is correct. This is a correct liquidity grab. This is how liquidity grab should be. Then let's look at the exceptions. Yes, like this. So why is there a liquidity grab? Why is there no liquidity grab at the top? Like I said, sometimes there might have been an internal range liquidity that has been cleared that we don't know, that we might not be seeing. Okay, so let's go. I'm seeing something here. Now look at this supply zone here. Look at let me call it, I won't call it supply, I'll call it resistance. Look at that resistance zone over there. Yes, this little resistance over here. Look at this wick. Look at that. What is that? That is a liquidity grab. You can see the reaction. That is a liquidity grab. So now that there's a liquidity grab here, tell me why there should be a liquidity grab here. Liquidity has been grabbed where? To the left. Just take a look at the left. Just take a look at the left. Liquidity has been grabbed on the resistance. Okay? Just take a look at that. So tell me why liquidity should be grabbed here again. No, it can't be grabbed again because it has already been grabbed with these movements over here. Liquidity grab. Look at this resistance. Liquidity grab. Where is the next one? Look at this small resistance over here. Liquidity grab. Okay? Now tell me why I won't take this trade here. And then because people always message me, does that is this not equal high? Is this not equal low? But look at its internal range liquidity. It has been grabbed already with this wick. As small as this wick is, that is the function. And look at the reaction. And then look at what happened. Outside again, reacted, sold off. Drawing out this trend line here now is basically pointless, saying there's liquidity here. No, there's no liquidity here anymore. All liquidity has been grabbed. So this supply zone is a very valid supply zone as far as I'm concerned. You understand? You understand? That is just it. That is just it. That is just the idea around liquidity grab. Internal range has been grabbed, so there might not be reason for this whole external range liquidity to be grabbed again, just like that. Let's continue going. We're still going to look at other pairs since you know, I don't have the current market price right now. At the release of this video, I can't analyze right now. You know, I told you I'm not available. Yeah, look at this. So tell me why price might still want to grab liquidity over here again. No, it can't grab liquidity over there because now it didn't grab liquidity. Look at what happened. Now it's now what? A breakout and retest. Let me use my trend line back. Yes. Look at the line. Focus on this white line. Look at what happened. Is it not meant to grab liquidity? But what happened? Price broke out, retested, and continued moving up. Why did it not break? Why did it not grab liquidity on this old trend line? Because looking at it, okay, from what everybody learns, from what they taught us, yeah, that is liquidity. There's liquidity here, there's liquidity here. So there should be a liquidity grab and then fall, right? But look at what is happening right now. Look at the scenario that we have. It's even retested, broke out, and then retested, just like this. And then those that are not even trading SMC or smart money concepts, maybe those that are trading breakout and retests, they'll see this beautiful trend line and they'll take this trade. And then they'll start which word do I use now? Which word would I use now? They'll start abusing smart money traders. That hey, smart money traders will say this is liquidity, but this is look at what is happening. They are trading liquidity, they can't see this and that. You understand? But let me show you why this liquidity grab won't work. Okay, just look at it. Internal range, internal resistance has been cleared. Look at it, simple. Liquidity has been grabbed. Liquidity above, clean. Look at this resistance here, clean resistance. Okay, another resistance is here again. It has been grabbed. All has been grabbed. Liquidity has been grabbed. Look at the crazy movements and look at the supply zone that it's even used to grab the liquidity. So now using this supply zone here is a valid supply zone, and even this also, you can see now liquidity has been grabbed. So now when you want to take a trade and then you are looking at all this whole zone, now drawing your trend line and saying, oh, I'm drawing my trend line, there's liquidity there, but it didn't grab liquidity. Why did it not grab liquidity? And then you are coming to my DM and saying, oh my god, I always draw liquidity, it doesn't grab liquidity, this and that. That is because you are really not focusing so much on the internal movements. You are so focused on the external, just that okay, you've seen that, oh, there's a lot of candlestick price action over here, there's liquidity there. Then next thing you do is what? You draw your magical trend line and assume that there's what? Liquidity there. What if there's no liquidity there? What if liquidity has been grabbed? Look at this trend line I just drew. Tell me why this trend line will not play out. Why? Liquidity has been grabbed already. Liquidity has been grabbed with the use of this supply zone already. And this supply zone is active because even the previous liquidity here has also been grabbed. Okay? So don't just think your trend lines are the one doing the magic now. It's not about drawing any tools. It's just about understanding the market structure. Understanding the market structure. Look at it. So there's liquidity here which has been grabbed. So tell me why this supply zone will not be active. Tell me why I won't trade this supply zone over here. Demand zone, sorry. Tell me why I won't trade this demand zone. Because there's liquidity grab already. But some people will still be drawing trend line and saying, oh my god, there's liquidity here. There's liquidity here. I'll use this demand zone. Yes, they'll say I'll use this demand zone over here. But me, I have already seen the internal range liquidity that has been grabbed, and then I'll be using this demand zone. So let's look at the one that played out. Look at it. And then you are now complaining that, oh, this and this, my demand zone is not working. It is because you are not paying attention. You are not paying attention to the internal structure. Okay? So I think I'm talking too much. Let's just continue. I wasn't planning to talk this much. And then I'll be looking at currency pairs also. Currency pairs. So that is just it. Try to understand the internal range movements and external range, so then you don't confuse things using magical trend lines and thinking, oh, there's liquidity above every single trend line I draw. No, no. Look at the market inside out, and try to change your psychology. Now I'll be moving to the next pair. Yeah, I'll be using just two pairs. Okay, I'll be using just two pairs. Now this is Euro CHF. This is Euro CHF. Now tell me why this supply zone won't be active. Because now there's already liquidity grab over here. But some people saying, no, this is liquidity. I'll be using this supply zone here. Yes, that supply zone worked. Yes, because it's a very active supply zone. But then what about this one over here? This supply zone over here. So you'd have missed this whole sell. How many pips? You'd have missed this whole sell. 64 pips. 64 pips is not small. All you need is 64 pips like this to pass an MFF challenge. And then you are done with the challenge. Just in one trade. So that is it. And then you are saying, oh no, there's liquidity here. You draw your trend line like this. Some will draw the trend line like this. There's liquidity there. And then you feel like because you've drawn a trend line above the candlestick, it should automatically grab liquidity with this supply zone here. No, it wouldn't always, because pay attention to the internal structure. Pay attention to the internal structure and then see how things will change. Okay, so let's go back in time. I don't want to tamper with the current analysis I have there. Let's just go back in time a little bit. Yeah, so let's look at this over here. Let's look at all the price action over here. Yeah, so some people will say, is this not liquidity over here? Yes, but you can see now, because we are drawing a magical trend line here, does not mean this supply zone should play out. Okay, what if market makers want to use this supply zone? That okay, no, we're using this supply zone. What do you want to do? Even though, look at this now, there's no internal structure liquidity graph over here. You understand? But then I'll still love to use that supply zone as to take a trade. Why? Because this supply zone has been mitigated here. Double mitigation 2, this is the first mitigation. Second mitigation, double mitigation 2 is always a sign that the supply zone is active, which is part of what I use for my entries. Okay, so that is it. So for the entries, I teach my students most of my entries and how to use it with the session. So we won't be doing that over here. Let's continue with the liquidity. Okay, so look at this one. This one failed. Okay, this one failed. Yes, internal range liquidity cleared, and this is a demand zone, right? Yes. What am I expecting? I'm expecting a buy, but left to me, I'll be taking this trade because it's not during the session. Okay, this is what I teach my students: taking the trade at the right time, so you won't be on the wrong side. Definitely, I'll be taking this trade. But look at what happened. It failed. Like I said, just because you are drawing some trend lines and some magical tools on some fancy tools on your trading view doesn't mean price should always respect those tools and then just continue as you are drawing the tools. No. Okay. Yeah, so look at this. I was taking this trade. Definitely I'll use my entry. I should look for an entry here. Definitely. I might, if I get an entry, and if I don't get an entry, but then I'm not going to be taking this trade because of the session. So let's continue. Let's continue and look at this over here. Liquidity over here. Look at that nice support, liquidity, and then there's a demand zone here. I would love to use. Yeah, so this one is even created more liquidity now, and then some people might still be saying, okay, then there's liquidity over here like this. There should be liquidity grab somewhere in the future. Was there liquidity grab somewhere in the future? I don't think so. Okay, it's only reacted from it a little bit and then moved up and then dropped again. So I believe the overall trend is bearish here. So you might not even really need to look for buying opportunities. So look at this. Internal range liquidity has been cleared. There might be no reason for price to use a supply zone to the left for the grabbing liquidity here. Liquidity has been grabbed already. All you need is just this supply zone. This is the supply zone you'll be using, and that is all. Okay, and then the price just continued bearish just like that. Bearish just like that. And some people might say, okay, this is liquidity here. Why is it not working? Why is it not working? Because internal range liquidity has been cleared already. Just look at the nearest support zone. So those that do not trade support and resistance should know to at least identify support and resistance over there. What is the next thing? This is the supply zone. Since there's liquidity grab, there is liquidity grab already, plus the break of structure. Don't forget, plus the break of structure. Okay, just like this. And then what are you expecting? You're expecting it to sell off from the supply zone. Simple. And then magically, you are not expecting this supply zone to play out again because of your trend line liquidity. You understand? Because liquidity has been grabbed already. You've already seen the internal range liquidity has been grabbed. Then I really don't need to look for this supply zone again. No, I don't need it. But then this supply zone is still very active too. You understand? Because there's a break of structure. You understand? But then instead of missing out on all this whole move because of your magical trend line that you think should always grab liquidity, you could have used internal range here. And you are done. Just like that. So same thing applies here. Support zone, liquidity grabbed. And then for me, since it's a very big demand zone, I'll just love to use the wick, just like I did in my previous video. And then that is it. That is it. Smooth. Then CPI came. I love CPI so much. Then just like that. Yeah, I believe I've been able to answer you guys' questions on liquidity and liquidity grabs, how to take trades inside the liquidity grab zone, inside the liquidity zone. Yes, so it's no longer a liquidity zone, it is now a normal supply zone due to the fact that you are using the internal range liquidity that has been grabbed. I believe you guys enjoyed this video so much. If you did, give it a thumbs up. It helps the algorithm. If you are new to this channel and you're just watching this video for the first time, make sure you subscribe to the channel. My mentorship is the same, 100 USD. If you need more information, chat me up on WhatsApp. You're going to get access to all my services, including one-on-one. That will be all for now. Peace, guys.